this is Japanese Economic Review Channel. This time, let's take a look at SBI Securities' domestic weekly outlook.
Great to be here. And honestly, looking at the data for the week ahead, um, we have a lot to get through.
We really do. So for today's deep dive, we're doing something a little different. We're stepping into the persona of the Nihon Keizai Toki channel, the Japanese Economic Review Channel.
Right.
And our mission is to take this really dense weekly outlook from SBI Securities for February 9th to the 13th and just decode it. We want to turn all this raw data into a story that, actually makes sense.
Exactly. And the timing is, well, it's pretty critical. We're sitting at what feels like a historic moment for the Japanese markets.
It really does.
If you've just been glancing at the headlines, you know the numbers are big. But when you look under the hood at the source material we have, the story gets even more interesting.
The engine is running hot, isn't it?
Mm.
So to keep us on track, we've got a clear roadmap. We're breaking this down into 3 sections from the SBI report. First up, Section 1, the weekly stock outlook.
The big picture. Nikkei to PSE. Where we are, where we're going.
Then we'll get into Section 2, focus materials and exchange rates. This is the engine room, right?
It is. We have to talk about the U.S.-Japan dynamic and what's happening with the yen, because that's driving almost everything else.
And finally, Section 3, the weekly timetable. This is going to be the real deep dive part of the deep dive, I think. We're going day by day through this massive wave of corporate earnings.
Yeah, it's just a spoiler alert. Thursday is going to be, well, it's going to be chaos. But we'll get there.
Let's not jump ahead just yet. Let's start at the top. Section 1, the weekly stock outlook. Before we even look at next week, we have to talk about what just happened.
The numbers are staggering. They really are.
So what was the close?
Nikkei stock average closed the previous week at 54,253.68 yen.
Just let that sink in. 54,000.
It's a huge number.
Yeah.
And that's a gain of 930 yen in a single week. And the broader Topix, it also closed up at 36.99, gained over 132 points. But the number in the report that really jumped out at me was the intraday high.
Oh.
At one point, the Nikkei actually hit 54,720 yen.
We are knocking on the door of 55,000. I mean, I remember when breaking 40,000 felt like this once-in-a-generation event.
And now we're here.
So what's the vibe? Is this rational? Is this a frenzy? What does the report say?
The source material describes the sentiment really clearly. It says there's a strong buy-on-dip appetite.
Buy on dip. We hear that phrase a lot. What does that actually look like right now?
It means the whole psychology has shifted.
Yeah.
In a nervous market, prices drop a little and people panic, they sell.
Right, to protect their gains.
Exactly. But right now, the moment the price dips, even a tiny bit, buyers are just swarming in. They see any red number as a discount, not a warning sign. The appetite is just voracious.
So it's the fear of missing out, the FOMO, that's driving the bus.
To an extent, yes. But it is backed by some specific themes. The report points to the Trump administration, influence, this sort of expectation of pro-business policies in the U.S.
Okay.
And then structurally, it's the strength in AI and high tech. We aren't just trading on hope here. Capital is flowing into the companies building that future infrastructure.
Okay, so the momentum is real, but, trees don't grow to the sky.
Yeah.
What's the forecast for next week? Are we looking at a reality check?
The forecast from SBI is,
Yeah.
well, it's bold. They're predicting a range for the Nikkei next week between 52,500 yen and 55,000 yen.
55,000, so they actually think we could break that barrier next week.
It seems entirely possible. Now, I have to add the nuance here. The source does mention that technical indicators suggest the market is overheated.
Overheated. That usually means get ready for a crash, doesn't it?
Usually, yes.
Yeah.
In a normal environment, you'd expect a cool down, maybe a correction.
Yeah.
But the analysis here is that the momentum is so strong that it won't cool down easily. The expectation is for a, quote, steady but high trend. So even if we don't rocket up another 1,000 points, the floor has been raised. We're just cruising at a new altitude now.
Now, it's a very optimistic take. Steady but high. It implies investors are comfortable paying these prices.
They are. They're comfortable because the earnings seem to support it, and this is the crucial part, because of the currency situation.
Yeah.
Which, brings us perfectly to our next section.
Right. Section 2, focus materials and exchange rates. You can't talk about the Nikkei without talking about the yen. The two are just joined at the hip.
They are. And right now, the yen is the gift that keeps on giving for the stock market.
I'm looking at the forecast here in the report. The outlook for the USD-JPY exchange rate is between 155 and 159 yen.
159. We are creeping very, very close to that 160 line.
So why is the yen getting so weak? I feel like every week we hear the US might be slowing down, but the dollar just keeps getting stronger.
That's the thing. The narrative of a U.S. slowdown just isn't matching the data. The why here is this unexpected resilience in the U.S. economy. The report specifically cites two things: the U.S. ISM non-manufacturing index and the employment statistics.
The January jobs numbers.
Yes, the ones that came out on February 6th. And those numbers were very strong.
Okay, so walk me through the chain reaction.
Strong U.S. economy means the Federal Reserve doesn't have to panic. They don't need to cut interest rates aggressively.
And if US rates stay high?
While Japanese rates stay low, you get that famous yield gap. Money just flows where it's treated best. If you can get 4 or 5% in dollars and basically nothing in yen, you sell yen, you buy dollars.
It's just simple math for global investors.
It really is. The expert predicts the dollar could test the 157 level pretty early in the week. And if U.S. inflation data, the CPI, stays hot, we could easily see it creep toward 159.
And just to close the loop on this, why does this make the Japanese stock market so happy?
Because Japan is an export powerhouse. So when companies like Toyota or Honda or Tokyo Electron sell their products overseas, they earn dollars.
Right?
When they convert that money back into a weak yen, it just inflates their profits. It looks like a massive windfall on their balance sheet.
A weak yen is effectively a huge tailwind for their earnings.
A massive tailwind. The report explicitly says that a weaker yen, especially in the high 150s, reinforces that bullish stock outlook we just discussed.
So, strong U.S. economy, strong dollar, weak yen, booming Nikkei. It's a supportive cycle.
For now it is. As long as it doesn't move too fast, it's the fuel in the engine.
All right, we've got the macro picture. High stocks, weak yen. Now let's see if the individual companies can actually deliver. This is where the rubber meets the road.
This is the fun part.
Okay, everyone, grab your calendars. We are moving into Section 3, the weekly timetable.
And this section is incredibly dense. We are right in the thick of the earnings rush. The sheer volume of information coming out next week is it's a lot. So we're going to walk through it day by day.
Let's start with Monday, February 9th. How do we kick off the week?
Monday starts with some economic data. The Japan money stock for January. But really, the market is all about earnings. And Monday has a specific flavor. It's heavy on infrastructure, real estate, and services.
Okay, so who are the headliners?
Recruit Holdings is a big one. They own Indeed and Glassdoor. So they're a great bellwether for the global labor market.
And I see SoftBank on the list for Monday. But wait, I need to clarify this. I always get these two confused. Is this the Vision Fund one?
No, and that's a crucial distinction. Monday is SoftBank Corp., the telco, the mobile carrier. Think steady cash flow, dividends.
A stable child.
Exactly. The wild investment crazy parent company, that comes later in the week.
Okay, good to know. SoftBank Corp on Monday. Who else?
Fujikura. You might not know the name, but they're critical right now. They make optical fiber cables.
Right, for data centers.
For AI data centers. It's a backdoor play on the whole AI boom. It's not just about the chips, it's the wires connecting them all.
That's a great insight.
Yeah, and we also have Oryx, the financial services giant, and Mitsui Fudosan, the huge real estate developer. So Monday's a really solid look at the domestic economy.
Okay, solid foundation. Let's move to Tuesday, February 10th.
Tuesday starts with a very important economic indicator. Japan machine tool orders for January.
Machine tool orders sounds incredibly dry. Why should I care?
Okay, think of machine tools as the machines that make other machines. So if a factory like Tesla or Boeing wants to expand, they buy machine tools first.
Ah, so it's a leading indicator.
Exactly. It's a pulse check on global manufacturing. If orders are up, it means companies are optimistic.
That makes sense. The canary in the coal mine. And earnings for Tuesday.
The big one is Honda Motor. With the yen near 159, their guidance will be under a microscope. Investors are expecting big things. We also have IHI, which is heavy industry and defense.
And some big global names reporting too.
Yes, a check on the global consumer. We get Coca-Cola and Marriott.
Soda and hotels.
Pretty much. High-frequency spending. If Marriott is full, people are traveling. If Coke sales are up, consumers are still spending. It helps validate that strong U.S. economy story.
Okay, so moving on to Wednesday, February 11th. I'm looking at the schedule, and it's empty for Japan.
That's because it's a holiday. Wednesday is National Foundation Day. The Tokyo market is completely closed.
A midweek breather.
A breather, but also a risk. Because while Tokyo sleeps, the rest of the world keeps trading. We've got UK GDP, US trade balance.
And I see Shopify and Airbnb earnings.
Exactly. So if something dramatic happens with, say, Airbnb's report on Wednesday night, Japanese traders can't react until Thursday morning.
Which can lead to a very volatile open.
It's called gap risk. And speaking of Thursday,
Oh,
well, you should buckle up.
Thursday, February 12th. Just looking at this list is giving me a headache. This is the main event.
It is the avalanche. If you only pay attention to one day next week, it has to be Thursday. This is where that whole high-tech narrative gets put to the test.
All right, let's break it down. Who do we have?
First, we have the Japan Corporate Goods Price Index. So that's wholesale inflation. But the earnings.
Oh.
Oh, man. We have SoftBank Group, ticker 9984.
Okay, so this is the Vision Fund SoftBank, the risky one.
This is them, the risk takers. And because they own huge stakes in companies like ARM, their earnings are really a proxy for the entire global tech sector. They can move the whole index.
And the semiconductor theme continues.
Big time. We have Kioxia, a giant in flash memory chips. The chip cycle is famously boom and bust, so if they're bullish, it's a great sign.
Who else in that space?
SMC. They make the pneumatic components, basically the air-powered muscles for robots and factory automation. If factories are automating, SMC makes money.
And what about overseas?
Even more tech. Applied Materials is reporting they make the equipment that makes the chips. So on Thursday, you get the chip makers, the chip equipment makers, and the chip investors all reporting.
That is a complete 360-degree view of the entire tech sector in one day.
And just to keep it interesting, you also have Netflix, Mercedes-Benz, and Airbus.
And Pan Pacific International, the parent company of Don Quixote.
Yes, can't forget Don Key, the king of Japanese retail.
So Thursday is just frantic. And then if we survive that, we roll into Friday the 13th.
An ominous date. And it could be ominous trading, because Friday is options CQ day.
Skew, special quotation. Can you just quickly unpack what that actually means for us?
Sure, it's basically the expiration day for a bunch of futures and options contracts. Traders have to settle their bets, and this leads to these big automatic buy and sell orders that have nothing to do with news.
So the market can jump around wildly in the morning for no real fundamental reason.
Exactly, just creates volatility. And amidst that chaos, we have a very specific earnings theme for Friday.
It looks in my mind.
It's all financials and insurance. You've got Tokyo Marine, Japan Post Bank, MSNAD, Sompo Holdings, Dai-ichi Life.
That's the entire insurance and banking sector reporting on the same afternoon.
It is, and it's incredibly fitting because Friday is also NISA Day, National Investment Day.
NISA, right. The tax-free investment program the government is pushing to get people to move their savings into stocks.
That's the one. It's symbolic. On the day we celebrate the shift from saving to investing, we get the earnings from all the banks and insurers managing that shift.
And we also have Daiwa House and Ineos and a new listing.
Yep, a small company called TO Books is listing on the Tokyo Pre-Ro market, a small cap to end a week of giants.
So to recap this massive week, Monday is infrastructure, Tuesday is manufacturing, Wednesday is a holiday gap, Thursday is the tech explosion, and Friday is financials, NISA, and volatility.
That's the perfect summary.
It really feels like a pivotal moment. The Nikkei's targeting 55,000, the yen is flirting with 160. We are running hot.
We are firing on all cylinders. You have the currency tailwind, the structural AI tailwind, and, this political tailwind from the U.S.
It sounds perfect, almost too perfect. What's the catch?
The catch is expectations. When the market is priced for perfection at 55,000 yen, good results aren't enough. Companies need to deliver great results.
So if SoftBank or Kioxia just says, hey, we had a decent quarter, the market could tank.
It could. That buy-on-dip mentality works until it doesn't. And if U.S. inflation gets too hot and the yen weakens too fast, you could see government intervention. It's a high-wire act.
It really is.
But for now, the net seems to be holding.
This has been an incredible deep dive. We've unpacked the record highs, the currency drivers, and this marathon of a timetable. Before we sign off, is there one final thought you want to leave our listeners with?
I think the question we all need to ask is connected to that NISA day on Friday. We see the Nikkei at record highs, the yen near 160. And this is great for exporters and foreign investors. But are we seeing a fundamental shift for the Japanese household? Are regular people actually participating in this wealth creation through NISA? Or is this all just a bubble, fueled by the Trump trade and a weak currency that leaves the average consumer behind?
That's a fascinating question. Is this a market for the people or a casino for the pros? We'll have to watch those NISA numbers to find out.
Indeed.
Thank you for watching the Japanese Economic Review. We look forward to having you with us again.